YouTube.
I'm so sorry. I accidentally went live in
higher, much
in
higher.
what's it called?
Right, that's cool. All right, that's good. Okay, that's good.
Okay.
Okay. Now I'm gonna shift the camera a little bit here so that I can. Yep. Okay. All right. That's good. Okay. Are you guys ready for exciting finance talk?
Yes.
Okay.
Yes. Yes.
Today's title was inspired by what I heard from a few from a few analysts and health scientists. So I thought it would be good I can share this with you. Okay. Wait, now let me pull out my slides first. Yes. So I entitled today's slide is How to Be Successful in 2022. Okay. Many of you must be thinking, Mr. Lu is going to share with me some stock pick tips. All right. Some stock pick tips, what to buy, what sell, whatsoever. Today will be a little bit different. Little bit different. Okay. Will be a little bit different. Yeah. So what I want to share with you first is a backdrop, the economic backdrop. Now I give bits and pieces of it along the week for the last one week or so, but I want to put it up more succinctly and more strongly with evidence-based things like that. Then the other one is that I will give you a lot of you have given me feedback. Mr. Lu, how to invest? Mr. Lu, how to start? Okay, Mr. Lu, what I do? Every day I get messages and email. So I thought it would be good I actually teach you all how to get started. How about that? Or for those already started, how to do it, actual steps of doing, so that you can become successful. I want 2022 this year to be a year of success, okay, for everybody. Now, I didn't say this is a year that you become multi-millionaire or whatever, okay? But this is a year where you start building your building blocks. How about that? Okay, cool. So, so the slides are under Success +1. My references that I pull out from are under REF +1. For those who want to see some Gucci stuff, GC +1, Bailey stuff, BL +1, and so on. Okay, cool. Okay, are you ready to go? If you're ready to go, tell me. Okay, if you're ready to go, tell me. Nobody's ready to go. Okay.
Do a countdown, dude.
Yeah. The problem is that there's a lag. There's a lag. Okay. So very important is this disclaimer. Oh shucks, all the slides cannot see. Okay, you gotta have the slides with you. The first slide is on disclaimer. Okay, this is more meant for educational, more for entertainment purpose. This is not a stock advice. Don't you ever dare go out there and tell people that Mr. Lu tell me to buy, Mr. Lu tell me to sell whatsoever. Okay, this is wrong. Okay, it's really for do your own research whatsoever. I coach, I guide, okay, but I do not tell you what to do. Okay, ultimately it's yours to decide, not mine. Okay, maybe get it right before I get in trouble with MAS. Cool. Okay. Now, very interestingly, the first slide. Okay, very interestingly, is that there's a new interesting trend that's coming out. Okay, which is that the Omicron wave right now is very clear how it will phase out. Okay, yeah, how you'll phase out. We have now one complete sweep, okay, across the South Africa. I don't know if you can see now, okay. The South African wave has peaked and died down in 2 months. I mentioned about it yesterday. I'll show you a more. Oh shucks, I cannot. Yeah, maybe you can see now. In 2 months, okay. YouTube, you can see, okay. The Omicron wave has came up and died in South Africa in 2 months. One sweep across the nation. You know how big South Africa is now? I think of 50 million people or something like that. Now, and in the path, it didn't leave a lot of casualties. That's the comforting part. And the best part is it has displaced the Delta variant. And scientists are now saying that it's very difficult to find another virus as powerful as spreading as the Omicron virus. So there's a strong belief that the Omicron virus is going to sweep through and it's going to be a dominant strand and is most likely to my opinion, and to a lot of scientists' opinion, bring an end to this damn pandemic. Right? That's good news, right? And I said it before, but we now have concrete evidence. So what I've said before now has come to pass. I want to drum it in everybody. The second graph here, yeah, actually, if you support, you like this, you can click like, I think it'll be very encouraging. The second one is that this is the UK graph. I know you can see now, this is the UK graph, okay? The UK phenomenon right now is that there's one big sweep that happened. A lot of people got infected. A lot of Singaporeans that returned from UK got infected. And guess what? Again, we are seeing the same dip. It peaked somewhere around the 20, it started to rise somewhere around 20th of December. Right now it's on the dip. It's about halfway through the dip already. I think within 2 or 3 weeks, the thing is going to come down and the whole thing is going to be over. What we are saying here is that, okay, the Omicron surge lasts roughly about 2 months, okay? Different countries start at different time because you need time for the infection to go, right? And the more relaxed the country is, the more faster it spread. But once it spread, wildfire, it then dies down, okay? There's some casualty, of course. Now, it's not for me to judge. I want to stay away from being a scientist, a health scientist, okay? I only can tell you statistically what happens. One sweep across, leave some casualty, don't think it's a lot, and then after that, everybody becomes immune. So, in short, the Omicron virus sweeps very fast, rapidly. The news is that the estimation is that half of Europe will be infected, okay? Right now, I'm seeing my own eyes. We are in the outlet store. Today, this person is here. Tomorrow, is not here anymore. Why? Because he got infected by COVID, okay? Our team here is hoping that we get infected early. The one who later get infected already, then cannot go back to Singapore, cannot celebrate Chinese New Year. That will be a disaster, right? Yeah. So we want to make sure that that if we have to be hit, okay, we rather not be hit, but if we are hit, let's get hit early, okay? Yeah. I think it's a good thing that that this wave happens so fast, okay? Now a lot of people say that I want to make sure I have avoid this. I actually think that the Omicron sweep is unavoidable, okay? We see these spikes. I can't see very clearly. These various countries right now, okay? I'll read to you the countries I'm in. The US cases are rising rapidly. Yeah, this is the US, okay? You can see the rise here, okay? It's going up rapidly. The next country is France. France has seen this huge spike. Okay, France sees huge spike over here. The next one is Israel, and this is Germany. Okay, Germany just finished one Delta variant hit, and then before it could recover, the Omicron hit again. So you have this double dip. Okay, so it really can't avoid. You really can't avoid it. This Omicron sweep is unavoidable. It's going fast, furious. Singapore already, I think the politician already say I give up. I think really unavoidable. Yeah, we're gonna get hit. Okay, 3,000 cases a day. I think there's a forecast. So the good thing is that when the Omicron virus hit, it's gonna be sweep very fast. And am I looking at all the graphs right now? They're happening. I do some simple mathematics, some linear extrapolation. I think I can basically have a good guess when's the time the sweep finish. And before you think I say this, many health experts say that the Omicron will bring an end to pandemic. They either bring an endemic and pandemic or whatever it is. Basically, in short, the pandemic is going to come to an end or people just bochap it. Okay, so who are the people who say South African scientists? All these references are in my REF +1. So before you think I I try to make all these articles inside. Bill Gates kind of say that as well. Okay. Some experts say that as well. CNBC, it's all over the news. From Fortune magazine also say the end of pandemic may be in sight. New Omicron studies. So I think this is like a broken gramophone. We already talked about it many times already. Okay. So this is the new Mr. Lu's analysis, more like a prediction, looking at how linearly interpolating all the numbers and how it's spreading. My take is that the pandemic will lose its bite in 6 to 9 months. Okay, 6 to 9 months. It could even end it in 6 to 9 months, maybe 12. What we're saying is that the pandemic will I am maybe an extreme optimist, okay? I even believe they will come to an end. But let's not take such a heavy position. I think 6 to 9 months, the pandemic will be a non-event right now in the world. Yeah, it still be lingering on and things like that, but it will soon lose its bite. Okay? So I think that the reason why I say 6 to 9 months is because it hits every country so fast. It hit 2 months, die, hit 2 months, die off, hit 2 months, die off. Singapore is just starting to be hit. I think we're in 2 or 3 months because we kind of restricted. I don't know whether is it better to let it just spread like wildfire and just sweep it across. Okay, so it's very important that the pandemic. We have a view when the pandemic will come to an end. Now this is my view. I could be wrong. I'm not God now. There could be other variant, but the scientists are saying that this Omicron variant is very difficult to be outcompeted. So I think it is a very interesting position that I would like to take. So the pandemic would lose its bite in 6 to 9 months and maybe even end it. Okay, with this, it means tremendous. It means a lot of things to the world right now. If the pandemic will come to an end, all the supply chain blockages that we're seeing right now, all the work from home, all the inactivity, all the low productivity will all fizzle away. Okay? Now, let's switch topic a little bit, which is what has been causing this huge stock market turbulence over the last 2 to 3 weeks. Anybody lost money?
Me.
Oh, Kelu lost. Benjamin, I think, also lost. Okay? I think I lost easily, I don't know, 500,000 or something like that, all this turbulence, easily. Okay? You just look at these graphs. Okay? These are the S&P 500. Oh, shucks, I cannot show it properly. S&P 500 and the NASDAQ. Okay? It has been going phenomenally up and down and down and down. Dips, huge dips whatsoever. The S&P 500 gone up, gone down, gone up, gone up. Now I really preempt everybody. Remember, when we were in Singapore, I told everybody that the stock market is going to go through huge turbulence. It just came too fast. The turbulence came very fast and furious, And this stock market turbulence, the NASDAQ was even worse. I think I lost more money in the NASDAQ than the S&P 500. Okay, which is why up to this day I never talk too much about NASDAQ because I think most of our audience are not really about NASDAQ. Okay. But the stock market has huge turbulence right now and foreseeably for some time to come. Okay, why is there huge turbulence? Because there is a fear of inflation, and I talked about that already, right? There's a fear of inflation. The inflation is now to the roof. We are looking at 7% inflation for the whole of last year for US, and the Federal Reserve, who has been calling the inflation problem not so serious, now is saying that it's a very serious problem. Okay. And they already kind of signal there'll be 3 rate hikes, interest rate hikes. For inflation itself does not kill stock market. You will not be happy inflation. Inflation itself doesn't kill stock market, but inflation causes interest rate, causes central banks to increase interest rate. And when they increase interest rate, oh man, the stock market get hit terribly. Okay, and this is something that I want to make sure that everybody knows, that the fear of inflation is really the fear of interest rate hikes. Okay, but really, if there is a increasing camp of people, including myself, because I'm saying it. You've been following me. I've been all while saying this. The inflationary pressure would likely to be transitory. That means short term. Okay. Now I always say that. Okay, I think it's mid to mid term. Sorry. Now more and more people are saying it. Okay. Alan Bleiner is the ex-Federal Reserve Vice Chairman. His article, I put it down on REF+1. Okay, so the interest rate rise, it's going to happen. But he says that the inflationary problem is likely to be short term, And I'll quote you, okay? He says, I quote you in the article, and if you have downloaded my slides, it's there, but in REF plus one, his article is there as well. Several factors lead to lower inflation rates ahead. Number one, price of crude oil, which more than double in November 2020 and October 2021, has begun to fall. Second, normal consumption patterns has re-emerged as pandemic fears subsided. Consumers start to buying more restaurant meals, hotels, movie tickets, and fewer are now shipped in boxes. So in that sense, the bottlenecks now are less. Omicron may delay the return to normalcy, but it will still happen. Most importantly, which is something I talked about it the last time. This is very important, okay? I'm a businessman. I'm an entrepreneur. I've got a few startups under my wing and a few others under my mentorship. All the entrepreneurs, when they see prices rising, what do we do? Anybody? Okay, just hold all your questions. I will answer them after the talk. Okay,
Ball string.
Yeah.
When entrepreneurs see prices increase, ball string.
No. When we as entrepreneurs see prices increasing, we rush to produce more. Yeah, that's common sense, right? If prices go up, I rush to produce more so that I can make more money, which is what it says here. So the ex-vice chairman, Alan Bliner, says that capitalism is on our side. Okay, the shortages raise prices, but the high prices increase opportunity for profit, which will then attract the capitalists, blood-sucking capitalists like me, to alleviate the shortages. They don't do it out of altruism. That means doing it out of good heart. They do it out of self-interest. Entrepreneurs, business owners, when they see price rise, rush to sell more. Supply will react to an increase in demand and prices. That's very natural. So therefore, as long as the supply bottlenecks are not there, the supply bottlenecks are caused by the virus. If the virus do come to an end, the supply blockages won't be there. So therefore, supply now can meet the increase in demand, okay? And therefore, we're going to have an inflation problem that will come down. Therefore, the need for interest rate to go up is less, okay? You get my analysis? Number one, I start off by saying that the Omicron is going to cause the pandemic to come to a manageable level and maybe even come to an end. Therefore, supply side blockages, supply side chokes will now be released. Okay. As a result, okay, when entrepreneurs see an increase in inflation, prices all go up. What do? They're happy like a bird. They go on and produce more. They don't any more supply constraint. When the supply comes in, all the prices will start to fall. Therefore, we have exactly a problem that is short term. Okay, you got my analysis? Yes, at least you say I understand something like that. Don't let me have a monologue here. It's very boring to have a monologue. Okay, same for those on YouTube as well. So therefore, Gucci is not Gucci plus one, it's GC plus one. Sorry, guys. Okay, GC plus one and BL plus one. For those people who Gucci is GC plus one. There's there are about 15 items there to be shown. Okay, so you give me some time. Okay, got it. Perlin got it. JS got it. Juliet got it. Okay, Zozo got it. Good. Okay. So therefore, then someone said, hey, the inflation risk is still there and whatsoever. Is inflation real? Inflation is damn real now, man. Inflation is damn real now. Prices are increasing like crazy. By the way, I'm going to go to the part that says what you should do. This is the time that please like and share. Okay. Now I already shared what the background is. Then what should you do now? The background is important. Please like and share so that people that you care capture this knowledge. Okay. And when you capture this knowledge, okay, then you know what to do. Okay. Yeah. Thank you. So therefore, but people say, hey, the inflation is real or not? Inflation is very real. Yesterday, we were, the girls were settling the bill at Gucci. Not Gucci, Prada. Yesterday, Prada went up, price increase again. everybody seems to be increasing price. Yeah, everybody seems to be increasing prices of all these items. Okay, so I've seen it myself. Okay, so therefore the inflation risk is clear and present. What I'm saying is that a general price increase of inflation, okay, is going to be short to midterm. Okay, so some say, hey, the whole stock market now up down up down ICI the kind of thing, right? The quote for today is success plus one. Okay, I think we are looking at yesterday a Prada increase of 50 euros a bag or something like that. Yeah, 50 euros a bag. It's quite a lot. Okay, everywhere we go right now, we see increase in items. Okay, so it's quite serious. Now, I want to say this very important thing about inflation risk, which is causing a huge turmoil now and will continue to cause a huge turmoil in the entire stock market. Okay, listen carefully. Okay, if something is already announced, even though that thing have not happened, what will people react? That means that if I already knew something is coming, okay, would I wait until that day that thing come before I react? If people know that inflation is going to happen and interest rate is going to go up, what will they do to the stock market now? The interest rate haven't happened yet. The interest rate haven't go up yet, but it will go up in future. But what will they do now? Anybody? Okay. They will start to sell now or will react right now. So therefore, the whole market over the last 2 to 3 weeks has been going through this huge turbulence, up, down, up, down, up, down, up, down, down. Why people are panicking already, are reacting to the pain of the interest rate anticipation. That means the whole market already start to build in the pain of the rise in interest rate. So when the interest rate actually rise, you know what happens? Make a guess. Historically, when interest rate actually rise, what happened to the stock market? Do you think go up or down? It's supposed to go down, right? No, it goes up. All the major interest rate rises cause market to go up, right? So therefore, what am I saying here? That the inflation risk is already anticipated. Market already reacting to the risk. It's already happened now. The market already reacted. In short, the market already go down already. Okay. So I've got a few articles here. You can take a take a look at it. You know, the minute they announce, the stock market okay. Wow, the last few months of stock market is quite scary, you know. Yes. Oh, the for those people who are weak heart, you know, I really got people writing me, hey, Mr. Lu, what do you do now? Market crashing. Ah! Come and listen to Kate Lu sing. Don't get yourself distracted. Okay? Yeah. So therefore, what I'm saying is this. The risk of interest rate rises is already anticipated, already built in the stock market. What I'm trying to say is the worst is likely to be over. Likely, not 100%. Why? What they're saying is if the inflation goes much higher than anticipated, then the stock market will kena again. But barring those kind of uncertainty, what I'm trying to say is this: the risk of the interest rate rise is already been built in. If all the bad news is already out, Omicron is already out. Okay, in fact, very few people factor in the good news of Omicron. The only person I can see in the whole investment field is me talking about this, that Omicron is a good thing. Second thing is that the inflation risk is already built in. So all the bad news more or less are, unless there's a war now break out between US and China. There's a new lethal virus that goes around killing everybody, locking down the whole world again. No, unless unanticipated shocks happen, the anticipated one are all out. What I'm trying to say is this, okay? Read my lips. Most of the bad news has already been factored in. So therefore, What I'm saying is that the market, okay, is going to be volatile, but I think that the bull run will continue. Why I say so? Okay, why I say the bull run continue? I'm not the only one to say there's a lot of what we call market bulls, stock market bulls. You know, going up is a bull market, going down is a bear market. Okay, this investment terminology. There's a lot of market bulls that are now saying, that the market will keep on rising. Okay, and therefore, I'm not the only one that keeps saying this kind of news. Now, of course, there are a lot more people say, "Oh, doomsday, doomsday, doomsday." But you know what? Okay, I have made a lot of money being a contrarian investor. Made a lot of money to be a contrarian. This is called contrarian investor because I like to see things differently from people, especially those people who have emotions. Maybe my emotions got eaten up by dogs when I was born. So now I don't have much emotions when it comes to investments. I can see things a lot better. I know a better investor than me. When it comes to stock market, I'm probably 70% robot, and I've seen people at 90% robot. Okay. Now you all have a lot of questions. I love to answer this question. Can you ask them after my talk? Okay. I finish the slide. I'll answer all of them. Henry got some questions, and I can't remember who I saw here. Oh gosh. Okay. Lao Tiu San or Lao Tiu, you also have a question. I'll answer all of them. Okay. So therefore, with that backdrop, let me rephrase 2022 again. Okay. In 2022, my prediction is, number one, the Omicron virus will bring an end to the pandemic. Time frame estimated 6 to 9 months. I could be very wrong in this. I'm just forecasting. So 6 to 9 months, the pandemic will come to an end, or at least to a manageable level that become a non-event. All the supply chain blockages will be removed, releasing a lot of goods and services and production into the market. The huge inflation risk right now, okay, will then be brought down. The interest rate reaction to the inflation has already factored in. If taking all these things in the horizon, there's going to be a one outcome. Okay, market will continue to go up. Okay, because the end of pandemic is going to unleash a huge amount of innovation in the market, huge amount of release of energy in the market. All the entrepreneurs will charge out, all the consumers will go and buy. The world is going to celebrate. How can the economy go down at this kind of environment, right? If this is, don't say, I can see it right now with my own eyes in Europe. It's already in form and shape happening. Okay, even with the Omicron virus. What more if the Omicron virus really put an end to it? Okay, cool. Okay, this is the backdrop. Now, if this is the backdrop, now it's very important to know the backdrop before you go into what you should do. Okay, because if a backdrop is wrong, then what you do is, could be wrong, right? First of all, do you agree? Don't agree? Let me take a pause here. I want to see some comments here. Okay, for those people in YouTube, you can also give me some comments on this. I think someone said that China has a zero COVID policy. Yes. Okay. I don't think they can last for very long. Okay. You agree? If you agree, you can. Yes. Okay. I will. Yeah. What we should do come next. Okay. I agree. It will go up, and Omicron will cause the endemic situation similar to stabilize. Great. Okay. Sher Tan says that as well. Today talk about insurance? No, we're not talking about insurance today. I want to talk about how to be successful in 2022. Okay, you agree with what I said? Have some question. Wouldn't increase the interest rate further? There will be 3 increase of interest rate, maybe 4, but they already announced it. Okay. Yes. All right. Okay. Mr. Lu, you mentioned increase bank loan interest rate is the Federal Reserve interest rate, a central bank interest rate. Can holiday again? You already can holiday right now. What do you think we are doing right now in Europe? Okay, when's a good time to activate dry powder? I'm going to talk about that. Okay, do we miss anything past few days? I think every day I'll try to give a flavor of what things. Please do a lot of like and share. This is what 33 years old. How do we start? This is how do you start? Today's talk is about how do you start. Okay. Yeah, there'll be interesting surprises of storm. Of course, we can only prepare for what we can prepare, right? Are you ready for me to now go into what you should do? Okay. All right. Okay. Think about it. If the market is very sian, is there any opportunity? For the last 1 year, everybody say, "Hey, Mr. Lu, the whole market keep going up, keep going up." Yeah, all-time high or whatever. Okay. There's similar analysis. Somebody say, looks like I'm in the right place. You have similar analysis to Tom Lee. Oh, really? Wow, Tom Lee if I have similar, I didn't even read Tom Lee's analysis. Yes, okay. Why is there CPA plus one? I didn't put any CPA plus one code inside. Okay. So today's slides is all success plus one. Okay. Lots of line share. Now, this is where you do line share. Okay. This is where I now transit into the topic on what it means, what we should do right now. Okay. Right, we should do right now. Take note, okay? This is the starting point. High volatile markets presents opportunity to the gutsy and determined. High volatile market presents opportunity to the gutsy and determined. Okay? If the market is just like that, everybody don't dare buy anything. Okay? Yeah. Okay, my sister has just reminded me, disclaimer, this is for education and for entertainment, not as a guide or what to buy. Okay, I'm telling you what I would do. Okay, I'm telling you, what general public knowledge and whatever. I'm not telling you what you must do. Okay, you can decide. Okay, just a disclaimer. So if the market is like this, nobody there invest. But if the market is like that, there's lots of opportunity there. If the market is, most of my money are most of my money are made during major crashes. I don't think there's going to be major crashes unless some shocks happen. Okay, it can happen, but most of my money are made in huge crashes. Okay, now, but I don't think it'll be huge crashes. There's going to be huge volatility. We already see it right now. Okay, so what should you do? Okay, what should you do? Really, I like this. I love this slides. How to be successful in 2022? How is success? Now, given the backdrop right now that 2022 is going to be a market that's like that. If you cannot tahan volatility, stay out of the market. It's okay. It's perfectly okay. You sleep better, eat better, life become better, whatsoever. But maybe I'm telling myself, if I'm in your shoe, like an amateur, a starter in investment, what I should do. A lot of people write to me this question, so I thought today I'll address it. Okay, if I'm in a starter. First step in extremely important. Many people miss this first step. Okay, is number one is do an audit of your family financials. Okay, you and your family financials. Take a look at your family financials. Okay, first find out how much dry powder you have in your house. Okay, go and open up all the rice bin, check whether your mother-in-law, your wife or your husband kept any secret stash money elsewhere. Use a spreadsheet, you write down whatsoever. Please calculate every single cent that you have. Okay. Take account of your CPF, your SRS, and your cash. You need to know all the amount of money you have. Why? Because if you don't know where your money you have, this total amount of money, you cannot decide how much you can use for investment. So this is what I call dry powder. Dry powder is the total amount of money that you have that can be deployed for investment. You need to calculate, you need to do an audit, very deep research, that in fact, you should calculate very clearly how this how much money you have. Okay, separate out your CPF, your cash, and SRS. The three different buckets altogether require three different strategy. If you deploy cash the same as CPF and same as SRS, then something's wrong. Okay. I can do previous days slides. Okay, I'll put them in our YouTube channel. For those people, oh gosh, okay, for those people, I'm going to put them in my YouTube channel. My 1M65 YouTube channel is called 1M65YT+1. Okay, for those people on Premium Mall channel, 1M65YT+1. Okay, happy is my okay, someone's very funny. My money very easy account cost not very much. No, you'll be surprised. You can calculate your CPF money, your OA money, SA money, all this, right? So first of all, find out how much you have. It doesn't matter if it's too little, it's little. It doesn't matter. You must know how much you have. Okay. Second is that you must know your income and major expenses. Income and major expenses. Income is very easy to calculate. Most of us only one or two income stream. Okay. But you must know your major expenses. Okay, most of us are major expenses in housing, insurance. Don't say, oh, housing I use CPF. That is also important. Okay, have a spreadsheet, calculate that out. Know what insurance. Most of us, I can't believe today someone wrote to me. I won't name names. The amount of insurance that he or she bought is I won't name names. I don't know, you can see, not okay. Every one of these is 1919, whole page. This is a total amount of insurance he or she bought. It's way too much. This is one of the major leakages of everybody. I wish to do the insurance talk again one of these days. Okay, yeah. Set aside 6 months, okay, in your CPF for a rainy day. 6 months of housing mortgage. Why I say CPF is because your CPF is in that sense, most of us use our CPF to buy to pay for monthly mortgage, right? Set aside 6 months for rainy day. Why 6 months? To be frank, in Singapore, you want to find a job is very easy. It's very easy. Okay. Now, for those people who are clicking 1M65YT+1, please click follow, because you will get alert when I put on new videos, and I'll put all the links there. Okay, the materials there. So why do you need 6 months? Is because I think it's very possible for people to have transition and transition period of 3 months from job to job. 6 months just being kiasu. Okay, 6 months. Set aside, let's say a housing mortgage is $2,000 or $3,000. Just set aside 2,000 times 6, $12,000 in your CPF. Combine husband and wife, because the housing is very stressful. Because it's a big one. If you have insurance and all this, that's another one. And next is, before you go aggressive with investment, number one is make sure you insure yourself adequately with term insurance, not whole life insurance or investment linked products. With term insurance, insure yourself adequately with term insurance. I taught you all the last time how to do it, right? You, in a nutshell, you calculate out your total family asset, total family expenses through a lifetime. You take the difference, you can find out how much you adequate to insure yourself. I won't go deep inside. Once you know how much you have in your different bucket, set aside money for rainy days, set aside money for major expenses, get yourself properly covered. You're now ready. You would now be ready to look at investment. In this position, what I'll do is that in this kind of market environment in 2022, I think for beginners, the first thing you need to do is set aside money that you can afford to lose without losing sleep. It may be 5% for some people, maybe 20% for some people. Some people think that they can lose 50%. Don't kid yourself. Okay, set aside money that you think you can afford to lose. So the whole aim is to start training and start doing the action, because the market now presents some opportunity. Okay. Second is that I realize that a lot of people haven't started commencing building up a financial safety net. Okay. They say, Mr. Lu, very difficult to do. I can't take the first step whatsoever. This is where I'm going to tell you guys, okay? Commence building your financial safety in your CPF for heaven's sake. Why are you taking such a long time to top up your SA? This one, I think I can talk. I can tell you what to do. Before you turn very gutsy and try to say, I'm going to swing $50,000, $100,000 from my OA to my SA, that leap of faith is too strong. Can you start with $500? Just for $500, or put $1,000. Just do the Swift. You can do online right now on with your SingPass on the CPF website. Okay, and start with $500, $1,000, maybe $5,000. For those a bit more gutsy and you huge amount of OA inside, OA to SA, you shift $10,000. Any amount that is bite size. The whole idea is to overcome a word called inertia. You need to overcome inertia, okay, so that you build the habit of doing it. Because if you do a big swing, it takes phenomenal amount of guts, investment guts. Very few people have that. So therefore, you take bite size and start shifting money in. So all this kung fu and the sequence is important. Start building your financial safety net first, okay? And that doesn't require cash. Just shift your OA to SA, okay? Now, some people say, and I'm going to buy a big house or whatever. Okay, if Mr. Lu saying HDB, you can say HDB also, okay? So start swinging bite-sized amount of money into your CPF from OA to SA, and once you've done the first step, the second step is easy already. The second time I do is much easier. Third time, because the first time I do very difficult. Well, after the second time, third time, fourth time, wow, later I just swing everything. Right, today, me and B has reached $1.6 million in our CPF, right? And it's continue to rise. Yep. So that's the second step, okay? The third step is, now I'm very against the Singapore stock market, but I'm very pro US stock market. I talk about it until my tree nata already. Yes, okay. So all the questions, please ask them after the talk. I will answer them. I promise you guys, okay? Open a stock market trading. So open a stock market trading account that enable you to trade US stocks. Because the US, the thing, I'm a big believer. If I'm you, okay, I would do an S&P 500 investment. That requires you to trade in US stocks. So you need to open up one US account. Now I've done some research. They're all in REF+1. There are two articles. One is by SingSaver. The other one is by Money Saver or something like that. Okay, they actually tell you what the pros and cons of various accounts. Okay, and this is very small, so I'll read to you. For those people who are following my slides, you can see also. There are many stockbroking accounts. The minimum commissions varies tremendously. The one for minimum, the low fees are Mumu charges. Where's Mumu? Mumu charges about 99 cents for minimum commission. Okay, Tiger Brokers charge 1.99 cents. Basket, my one, which is Standard Chartered, charge me $10 per trade. Maybe I should start changing, right? But okay, but at least I choose Standard Chartered because banks a bit more reliable and things like that. Okay, but nowadays stock broking commissions are very cheap. Interactive brokers only charge $1. So there are a lot of options there. The article is in REF+1. Okay, you can open up one. This is what I want to say. Okay, to open up a stock broking account takes a long time. At least the experience I have took very, very long, weeks. Okay, there's no CPF+1. I don't know why every type CPF+1. Okay, inventing new codes. REF+1. Okay, these are my references. So the article is there. SingSaver has a lot of recommendations. I'm not the one who recommending. Okay, they are the one who are recommending. SingSaver.com. Okay, I don't I got no recommendations for which account to open. I have a Standard Chartered account. There is I think Kelu, which account do you use? Mumu or Tiger? Tiger is also recommended as a very low fees as well, and there are a lot of bite-sized investment. It takes time to open an account. Go to the article REF+1. They tell you which one is good to open. You decide for yourself. Okay, yeah. but I use Stand Charter. I also have Poems. Poems is in Philips Security, has no minimum. So I think they're quite okay as well. Okay. So, yep. Now you now are ready to commence your investment. Okay. Investment. Yes. Thank you, Teddy. This is very important. Someone, a financial blogger, after listening to my talk, actually drew this graph. I thought it was very good. You commence on building your financial safety net, which is your CPF OA. You do not to fill it up to full before you start your stock investment. I would prefer that, but most of people really can't wait. Okay, given that has happened, it's okay. Next is that you find assets a compound. In my case, I told you, I'm a very strong believer S&P 500 whatsoever. Okay, and before I go into other things, so it's a two-pronged strategy. Number one, start shifting money in bite sizes into SA. Okay, I'm teaching you about bite sizes. Once you feel very good and comfortable, start looking at stock market right now. Okay, now I'm not telling you what you should do, what I would do if I'm a beginner. Okay, so better take note. My language is very clear. Okay, it's for education. The whole stock market right now is very volatile, very volatile. Just look at the last 6 months. Okay, I got this graph here which I can't show all you guys because of reflection. Okay, if you can see, the S&P 500 somewhere in September went down by 6%. 6%, and it went volatile, and went up again, and it crashed by it went down by 4%, and went up again, went down by 3%, went up again, went down by 3%. This is an indication of huge volatility. Huge volatility. Now, I cannot tell you exactly when you do. This should give you a guide, okay? I like to buy things on the dip. Ideally, we would like to buy when the whole market, one nuclear bomb come down, lao sai, kind of thing. That kind of opportunity comes once every 4 or 5 years, sometimes 3 years. But when those days happen, most people don't dare to invest. Let's not kid ourselves. When those days happen, all of us lao ju already. Yeah, all of us will really experience immense fear. So the only way the alternative to that is look at these little dips and take advantage of them. Okay. Now it ranges from 2.7% and 6%. So you can decide when the dip is. You just buy. One of the ways we call dollar cost averaging. Right? Just don't care. Don't care the market go up or down. Just go and buy. That dollar cost averaging also very difficult for a lot of people. A lot of people like to take advantage of the market when it goes deep. Okay, I give you 3 strategies. Number one, if you're like me, wait patiently for the whole market to go lao sai. Will dip really badly, then you go and buy. When the market dips 30%, you go and buy. That kind of guts requires a lot. The second is you don't do dollar cost averaging. You regularly, every week, every month, or whatever, consistently buy. That's also very difficult. Third is whenever you see a market dip, there's a lot of volatility, then you nibble your way in. I use the word, okay? Nibble, okay? Nibble. You nibble away in the S&P 500, okay? For those people who wants the recording of this this video, it will be my YouTube channel. My YouTube channel, you can follow it. It's called 1M65YT+1. 1M65YT+1. Just remember to follow. The following is important, okay? Let me go back to my slides. So nibble means you really buy small buckets. The best part is that nowadays stock market you can buy. Kilu, how much can you buy in Momo? What's the smallest?
I don't know.
What's the smallest you ever bought?
I don't know. I just buy one whole stock.
Oh, is it?
At that point of time, I didn't know the concept of
Nibbling.
Yeah.
So I think you can even buy $500, $1,000. You go in small bites. Remember, in the start I told you that you need to do an audit of your financials and you see which one you are. So what's your dry powder? That means the amount of money you are prepared to set aside, and you can afford to invest. If you lose it all, you won't lose sleep. Use that money, if I'm in a beginner stage, I start nibbling into it. You know, whenever market goes down, I buy a little bit. Market goes down, I buy a little bit. Little bit. The key is your emotions. Your emotions must not get disturbed. Okay? Yeah. For those people who have been waiting for those, what do I use to track? This is Yahoo Finance. Okay. For those people who are waiting for Gucci is coming out, you can preempt this by using a GC plus one. Okay, my wife who is waiting impatiently right now is staring at me. Okay.
We are shopping.
Okay, great. Okay. So nibble your way in. All this one gives you some guide. What's the percentages to go down? No, you can nibble your way in or whatever. I think from the peak to trough, it goes down by, there'll be huge volatility. It goes down by a bit, 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 you know, feel good. The whole market, I believe, will go like that, but that's my view. Okay, it may go like that, it may go like that, but certainly there's a huge amount of swing. Okay, do I view that the market will go further? I think the market will have huge amount of swings, that presents us some huge opportunity. Okay, GC plus one for Gucci, yeah, for those people who want. Okay, I'm going to end this talk soon. So for 2022, how do we do it? Is first of all, we first need to understand, have a prediction of what is going to happen in the market. Second is that the characteristic of market will be one with huge volatility, but unlikely to have huge crashes. Okay, so therefore, what we should do, okay, is to make sure we set aside a sum of money regularly and start activating our financial safety net, because that stabilizes our financial emotions. And the other side is that you start to nibble your way in whenever the market has some volatility. And I've already given you some guidance already. Okay, the last step, which is I want to stress, is very, very important. Don't be alone in your investment journey. It's very, very lonely and painful. It's very, even seasoned people, investors like me, occasionally will also get cold feet. And I need to talk to someone or listen to someone to say, we are in the right course, stay in the right course. So therefore, surround yourself with a community support and mentorship. Okay. Now, it's very difficult in the past, to get community support. Nowadays, I already have some channels here. You can also find some other one. I got 1M65 Telegram channel. It's very noisy, but there's a lot of experts there. You got any question, you got any fears, write it there. Someone will address it for you. I think my 1M65 Telegram channel, the shortcut key is called, where is it? 1M65 TG plus 1. 1M65 Tango Golf plus 1. Okay? 1M65 Tango Golf plus 1. That you remember, follow a page, it'll be very noisy, but whenever you feel a bit nervous, a bit unsure whatsoever, ask the questions, get some assurance that I'm in the right path whatsoever. Okay. Now I'm gonna be regularly talking here. For those in Premium Mode, you got some advantage. For those who are following my YouTube channel, for those who miss out my talks, you can go to 1M65YT plus 1. Okay. My YouTube channel, I'll record it down. Listen to some of my talks. Don't just listen to me. Go look for other financial experts as well. There are lots of them, and they will also give you some advice. That Telegram channel, 1N65 TG plus 1 is the one that we have a community supporting. So with this community support, you won't get nervous. So you know the Kung Fu, you know the action, you got a community support. Collectively, 2022 will be a successful year for you, because what I'm sharing so far is 2022 is a year you train your investment muscles. These are steps you need to take. Now, some of you say, 2022, I want to know a secret. I want to know how to make $1 million. Investment Kung Fu takes years, months to build up. The most difficult part is starting right and knowing right. Today's talk is about teaching and imparting to you the training formula. okay, then you will know what to do so that 2022 will be a great investment year. Okay, cool. All right, okay, so right now, because I've been hogging the channel for. Do you find this today's talk useful for you? Yes, can you please give me some acknowledgement? Today I sing song, I talk, I cough, almost coughed. For those people on YouTube, you never get hear my song, thank God. Okay, yes. So I will try to in every day of the week on the Premium More channels, I will talk a flavor of some financial stuff along the day, especially answering a lot of questions that people ask and sensing some senses. Every weekend I'll come in and do a long talk like this to sum up and give some real solid kung fu. Okay, I hope that you find it useful. Okay, there's a lot of questions that come. You can send them in. Ideally, if you send in my YouTube channel, it'll be easier because so I'm gonna hand over to B and Kelu right now. They're gonna do the Gucci sale. Okay, it's under GC+1, and then I'll come back. Okay, to answer some of these questions. Thank you for joining us, and now it's going back to I guess I borrowed the Premium More channel to do a finance talk. Okay, I'm gonna hand it back to them. There's some great Gucci sales. Okay, I'll pay to listen to you every day. No, I don't believe in collecting money for this. I mean, there's a lot of people who collect money. A lot of people collect money to teach, and say they're very good. Therefore, you learn from them. I always say this: if you are really that good, why do you need to collect money from people? Right? It's very funny, right? I hope you find it beneficial. Send me your questions. Any questions that you have, you can send me. You can send me the questions either in the Premium More channel or in the YouTube channel, or just drop an email to me. My email is luchengchuan@gmail.com. Okay, cool. With this, I think there are about 15. All the Gucci bags are on our Shopee page right now. There's a 7% discount that lasts. Oh shucks, I talked for so long, for 2 hours only. Okay, thanks, sister. And then I'll come back later and answer some of the questions. Okay, cool. I think this thing will take probably how long? 1.5 hours?
Very fast. Half an hour?
Your hair, you need to tie your hair.
Oh dear.
Yes.
Okay.
Yeah.
Half an hour?
Cool. Okay. What about the question? What question? Okay. luchengchuan@gmail.com. Yes, that's my name, Lu Cheng Chuan. Yes. You can email me. I'll answer when I come back. Okay. How do you nibble? Every 10 days. I will show you where the dips are. Whenever the dip go down by 2-3%, 2-3%, 4%, 5%, you can nibble away. Just, you can ask the question later, I'll answer it properly. Okay. For those people, I look at Gucci. Bailey yesterday is BL+1. What else we have? Charlene, you're very welcome. Okay. Thank you, Philip, Okay, Mama, are you ready? Okay. All right, Kelu, are you ready? All right, okay. I'm gonna end YouTube right now. Okay, so you're very funny. My finance channel, the handbags, but okay. All right, cool. Okay, all right. Okay, over to you. You got 1 hour now. I'll come back in 1 hour's time. Okay. All right. This
Hello, it's me.
This is Lou and his YouTube channel. Thank you guys.
Yankee baseball cap.
Okay.
NY.
I will.
New York.
I'll come back later. Okay, 1 hour's time. All right, cool. Thanks everybody for joining. I'll off it right now. I'll put the link of the article in the comment section. Okay. Thank you guys.